Yes, everybody, hope we are all good. Welcome back to another YouTube video. So, as you can tell by the title, today going to be doing something that I haven't done before. Obviously, I've done my videos on how I find my weekly bias, and I do my weekly bias breakdown every single week. So if you don't see them, make sure you do. They're sent out on Sundays at roughly around in between like 5 to 7:30 p.m. In between that time, that's where I send those videos out. So if you want a bit more of an idea about my bias and stuff like that, and going into the week, make sure you're tuning into those videos and getting as much detail from them as you can. I cover everything to like where the week candle is going to go, in my opinion, what's my draw, blah blah blah, what market structure, why we're doing certain things, right? But so today I'm going to be doing how I find my daily bias, right? So every morning when I come into the markets, I like to find a clear bias. And when, by the way, I've got no notes for this. These are my videos. How I do, just no notes. I've literally just opened this, and I thought I want to do this video. Bang! This is what we're doing. So no notes. So if I'm sometimes like just typing or something like that, or like figuring something out real quick, then just bear with me. But I like to do my videos really raw, and I don't like to set loads of things up beforehand, because I just think I want everything that I say to come from what I actually like think on the spot. That's what it should be in trading, because you see these videos and it's like they've got everything planned out, blah blah blah, and I just think everything should just be a bit more like free, in my opinion. So yeah, daily bias. So daily bias is similar to the weekly bias, but it's more on a smaller scale, right? So I'm looking at things which is going to be my targets for like the day, where I think price is going to, blah blah blah. So this is what happened when this is kind of like a bit of a bias that was kind of live. If I did this, I should have done this video this morning actually when I first woke up, but I didn't. I wasn't at my computer at the time, but I've opened my phone this morning, and I've opened up to this. So this was 12 o'clock. No, actually, I couldn't have woke up to this. I woke up to, where was it? It was about, it was one, right? So I've woken up somewhere around here, right? This high was still intact. So for me, the clear and obvious bias up until this got swept is going to be bullish, right? Because we've got this, which is like a prominent high, an external high, and then we've got all these internal highs. So if you're thinking, Morgan, what's the difference between an internal and external high? Is, well, it's pretty obvious. So we have highs like this, which are external, so swing highs and lows. So this is a swing high, this is a swing low, and then in between this range we have all these internal highs. Swing highs and swing lows have a lot more of a significant draw than internal highs and internal lows do. So this is a much more of a bigger draw on liquidity than these are, right? Why? Because this is the area in points, so these are the swing highs and lows where institutions are getting into their big positions, and we are leaving these external highs and lows because the order flow coming from these big positions are starting to come into the market, and we leave these prominent highs and lows. And these prominent highs and lows, 9 times out of 10, are like maybe like taking out other areas of liquidity. In this case, we actually didn't. We just started to sell off from, we had this hourly order block here, so we've started to sell off from this hourly order block. But like here, for example, this swing low was from sweeping out this low there. So price has swept out this low, left this low, and this is where we have this swing low. So my draw on liquidity was pretty obvious. We've been very, very bullish at the start of the week, and I saw this external high. So this external high, which was inside this 1 hour order block, this was my very obvious draw. Why did I wake up this morning and think bullish to start with, right? Because like I said, we had this high sat resting, which I'm thinking, okay, this is clearly going to want to get taken to. All these highs that we had in this leg here, right? So we've got this high here, this high here, this high, this high, these highs, and these blah blah blah. Ooh. We've just been straight running through them, right? We've not been showing any reaction, even to highs like this, Here, we've just been running through them, showing no reaction. So clearly we're in current bullish market structure, right? As you can see, we're making very little move towards the upside, towards the downside, and huge moves towards the very little move towards the downside, huge move towards the upside. Second of all, right, I don't think there was anything on the actual 4 hour. No, I am right in that. Apart from this 4 hour order block here, so I'll mark this out quickly. 4 hour order block. But then on the hourly time frame, if we go into the hourly, we didn't even have many unfilled gaps either, which if you did watch my bias video, right, on Sunday, so 2 days ago, you would have heard me say, if price wants to move up, it will 100% do so freely because there is very little opposing PD rays in the opposite direction. So the PD ray I focus on the most, as you know, is fair value gaps. Fair value gaps, imbalances, and order blocks comes in second, right? But my main focus being like fair value gaps. What do I like to see is like draws on liquidity, unfilled fair value gaps, right? So unfilled fair value gaps acts as a draw on liquidity. Why? Because price will want to draw towards these levels to rebalance and then continue to make moves higher from there. So unfilled gaps acts as a draw on liquidity for me. So coming into the week, what did I see coming into this week? I obviously saw no unfilled gaps. So I said if price wants to move up, it could very much do so with ease because there is nothing in the opposing direction. And that is what we've done, right? We've continued to make these moves towards the upside and we've shown very little reactions because we had very little opposing gaps. We created, upon open, the only opposing gap we created was this. So I created this gap, we've ran through it, right? And then when I woke up this morning, I'm thinking, right, what fair value gaps, what PD rate, what have we had which could stop price from going higher? Is there anything in the way, right? I'm sat there, I'm looking, I'm thinking, right, there's nothing really that's unfilled. We've got this small hourly fair value gap here, which has already been filled. This, we didn't have a gap here, no gap here. This was the only unfilled gap, and this is what I look out for, right, when I'm looking into my daily bias. I look at unfilled gaps, right? We have this unfilled gap here, but we had this, obviously this was yesterday. So I'm not looking at this to maybe like take a trade off or anything like that. I'm looking at, did this get respected or disrespected, right? Did price tap into this level and respect it, or did we disrespect this? And what did we do? We disrespected this fair value gap. So if this is the most like freshest piece of data that I've got to go off of, what am I going to look for? I'm going to look at, right, are we respecting it, disrespecting it? We disrespected this bearish gap and then continuing to make moves higher, right? We had this 1 hour fair value gap here. What did we do? I can notice when I woke up this morning, right, we disrespected this 1 hour imbalance as well, fair value gap. So we've been disrespecting bearish and respecting bullish during the night when I'm asleep. And then, because you can see, we respected this bullish here as well. So that's what I'm seeing. And then I'm also looking above, right? So when I woke up this morning, I'm jumping onto the daily. When the daily wants to load, I'm looking at the daily. I'm thinking, is there anything above in the daily which will be like, right, this is the draw on liquidity? Nothing PD array wise, right? So there's nothing on there. I'm looking on the 4 hour. Is there anything on the 4 hour which is like unfilled, which could be our draw on liquidity? And no, there is currently nothing towards the upside which is unfilled. We've got no unfilled 4 hour imbalance above, which acts as like a big draw on liquidity. And then I'm going to chop onto the 1 hour. So I go into the 1 hour and I'm looking above. I'm thinking, is there anything above which is like unfilled, which can be a huge draw on liquidity for me? And this morning, as I woke up, I've sat there and gone, no, right? So I'm thinking, right, no, there's no PD rays above which we want to draw towards, right? But then at the same time, we've got nothing above which is going to be opposing. So I'm now currently thinking, right, so we've got no opposing fair value gaps which are going to want to draw towards. We're currently in bullish market structure. As we can see, we're just moving towards the upside. We're making higher highs, higher lows, higher highs, higher lows. And we are disrespecting imbalances and PD arrays which are bullish, bearish, and respecting bullish, right? But the main thing I'm looking at, right, is this significant high. And this is what I wanted to talk about a bit more in depth, because this is what your drawn liquidity is going to be. And the reason I say this is because I've had a few people message me recently, and when it comes to like, you know, trades going the wrong way, it's because they're taking trades off of like internal highs getting swept here, when internal highs or external highs are above. So in this case, like this morning, if we chop down into the 5 minute, when I've opened up straight away, right, there's a clear like short position, right? So because what have we done? We've swept out this internal high here, as you can see, swept out this internal high. We've had this 5 minute fair value gap there, and we have shifted market structure here. And you might be sat there and saying, but Morgan, this is your model, you know, swept to high. Everything when it comes to my model, right, comes with conviction. I'm not taking I'm not taking a trade based off of like my entry model purely because I see my entry model all the time, right? I'm always seeing market structure shifts and fair value gaps getting tapped into, right? So, excuse me. Let me try and find an example. So right here, right? So we've had this small 5 minute get tapped into. We've got this market structure shift here, right? As much as this played out, am I taking this? No, right? Why? Because this is just because this is my entry model, right? Doesn't mean I'm taking it. So everything's built up with obviously conviction. And why would I not take this? Because I haven't seen my main thing, which is a liquidity sweep. But that's against the point in this choice, right? Because that was purely just to say, you know, I see my entry model all the time. But everything's based on conviction. So what have I seen here? I've seen a sweep of this high, and then we've actually come and souped out this high here as well, and then started to make moves lower. 5 minute fair value gap, 5 minute market structure shift. And then we've had, you know, I could have gone short here. Boom. I always like to put my stops at like swing highs or like the most prominent high. And to be fair, this wasn't a bad stop at all. This was like only like a 110 pip stop, so it's not too bad. And I could have had my TP down there. So I could have let this play out, and boom, I'd have been stopped out, right? And why would I have been stopped out? Because I came onto the day. Why didn't I take this trade, right? Because I knew I would. There's a high chance of me getting stopped out. Is because I knew that this external high was my drawn liquidity. So instead of wanting to be like, right, let's short here, I'm thinking, right, this external high is going to be the draw. So is there my first thing I'm thinking of, can I trade towards this, right? If this is my drawn liquidity, it doesn't matter if I'm bearish on the week, right? If my drawn liquidity, which is here for us to then move lower from, so my prediction, I did say on the video, on the bias video, I do think price will want to come higher and then come lower, right? So that was what I said on the bias video, because we had a lot of LR above, we had this external high. I thought, right, prices, if it wants to come down, it's going to want to come up first, right? So I was thinking coming into the day, is there any way I can trade towards this, right? Is there any way, so instead of being like, right, we're going to take out this high and then sell off from it, right? So we're going to trade up and then trade down. I'm thinking, right, is there any way that I can, you know, if I'm so stuck on this, what's the word? On this drawn liquidity, if I've got a really strong conviction on this draw, is there any way I can trade towards it? Sadly, this was last night, and this would have been a really clean trade toward this draw, because why? We've swept out this low. We've shifted market structure towards the upside. Lets me tap thingy. We've then had this 5 minute fair value gap get retraced into, right? So this would have been a really clean trade to take towards this draw, right? Towards this high, which is all the way up here. So instead of thinking, right, I'm going to try and like sell from this, I'm currently thinking, is there any way I can take longs from this? Is there anything that I can see which it's you know, I can take longs towards this drawn liquidity instead of waiting for this drawn liquidity to get taken, and then we can sell off. Because when you're trading like that, right, you're always trading in the mindset of, right, that's got to happen, then I can do that. But that's not obviously going to be guaranteed, right? This is not going to be guaranteed on the fact of as soon as we take this high, we're going to start selling off because, you know, people can be wrong. I can be wrong. I can sit here and this morning I said, right, we'll probably come and take out this high, and then I can imagine seeing us sell off from there. And then what have we done from there? Let's catch up a little bit. Right, so this is where we're currently at. I did want to short here, and I really liked the shorts from this 5 minute 5i gap. Didn't get the retrace. Was gutted. I was in live trading talking about this. Didn't get the short, right? Because we've swept out this high, right? So this morning there was nothing I could have took long off them, right? I was really wanting to take longs. I didn't get an entry. Did not get an entry for my longs. My draw liquidity has been taken. What in my mind is left, right? In my opinion, in my bias that I had was, if we take out this high, we then continue to sell off. So I can now start for looking for shorts because we've swept out my drawn liquidity. So when my drawn liquidity is intact, what am I thinking? I'm thinking, right, how can I long towards this? My drawn liquidity has been taken. I'm thinking, right, how can I short from this? So I did really like these shorts here because like I said, we've swept out my drawn liquidity. We had a market structure shift towards the downside here. Why is it not working? Market structure shift there. 5 minute 5i gap. We literally, it was a 7.3, 8.4. Literally like a 10, 11 pips difference in whether I took that trade or not. It would have been a banger. I was just going to target a 1-to-1. But yeah, really disappointing. So now this is another thing I wanted to get onto. When my drawn liquidity has been taken on the day, what's next, right? What's next? Well, I want to start seeing how we trade off of the drawn liquidity. So I'm looking at this now, and what can I expect? So if we now continue to run through my draw, right? So we've made a small retrace down. We've not got any opposing 5i gaps here. We'll look on the 2 hour. We've not tapped into this 2 hour here. If anything, we've disrespected this 1 hour imbalance there, right? So we've disrespected this 1 hour imbalance. But what are we currently seeing? We are currently seeing price start to rally back above. So as we rally above, and if we continue with this bullish momentum, what am I thinking, right? So because everyone has an ego, right? Everyone has an ego in trading. You have your logical self and you have your egotistical self, and this is where two things in trading can go horribly wrong, because if you let your egotistical self take over, that's when trading starts to become a problem, because you can never be wrong. You never want to be wrong in this instance, especially in trading. So if I'm starting to see us just displace through this high, right, which was my draw for us to then sell off, I've got to sit there and look to myself and think, right, so why are we still moving up? And that's where you've got to look, like in trading, you're always looking to the left. And what can we clearly see here, right? And I think depending on how New York session goes, my bias will be heavily changed coming into the week, right? Because we have got hella LR above, right? We have got hella LR, right? So we have got hourly high, hourly high, hourly high, 4 hourly high, sorry, all these are 4 hour highs, 4 hour high, 4 hour high. So this is a clear and really nice external high. If we go to the daily, really clean external high here. And what do we have? We have all this internal LR. So if I'm thinking price has failed to react and show any displacement from my drawn liquidity, right, then that must tell me something. That might tell me that we are going to remain bullish. Because why? We've got hella LR above. We've got this daily prominent external high. We're displacing through my drawn liquidity, which I said if we sell off from here. So if we fail to do that, I've got to sit there and push my egotistical self aside and go, right, we are pushing through my drawn liquidity where I thought I was selling off. Am I going to be greedy and want to stick to this bearish bias and I am right, or do I allow myself to be say, right, Morgan, you can be wrong, all this LR above, clear external draw, and then overall, as you've all heard me talk about on the bias videos multiple times recently, I've talked and said my overall draw for the next few months and weeks is this, right? And then for months, we're talking like this high up here. There's no way these highs don't come and get taken. But in the long run, you can have sell-offs, right? We've been bullish for so long. As you can see, we've been hella bullish. We were bound to have a sell-off at some point. So I'm pushing my egotistical self aside and I'm thinking, right, we've had this small sell-off. To me, it kind of looks like we've got a... nice little market maker buy model coming on here, where price can potentially, you know, come take out all this LR, come take out this external high here, and start to move towards this, right, and start to continue with this move higher. But what have I done, right? I've analysed in the morning when I wake up, say to myself, right, we've done this, this and this. Could have looked for sells here, didn't. Why? Because my draw was still intact above. I've then looked for sells from here, didn't get my entry, sadly. Would have been a clean trade, didn't get my entry. And now I'm thinking, right, we've sold off from taking out this high, so liquidity's been taken. We can see that here, liquidity's been taken. But now price proves to continue to be bullish, right? And we're ripping, right? So do I say here and say, right, my draw liquidity for the day's been taken. My overall bias was bearish after we swept this high, right? Do I now try and force trades towards the downside? If we sweep out this high, so a super that high, and then continue to sell off, then yeah, great, right? But for now, my high's getting pushed through. We're continuing to displace above. We're not really showing any bearish reaction. Do I have to switch my bias? Do I have to swallow my pride? Yes. And that is pretty much how my daily bias goes along. I am a trader who trades very... what is the word? I always forget the word, and I use it so often as well. Discretionary, right? I trade very discretionary, and what that means is I will trade very... in non-fancy words, I will trade very adaptively, right? I will adapt to conditions, and I will try and adapt my, you know, if a long presents itself, a long presents itself. If a short presents itself, short presents itself, but all based off of conviction. So my conviction now to take longs would be, well, with this high, looks like a super strong draw at the minute, as you can see, right? Price is drawing toward this high. So my bias could be, I could take longs towards this. What could we come and see? It'd be nice if we showed a disrespect to this 30-minute bullish imbalance, bearish imbalance, sorry. So we close above this, disrespect it, small sell-off, sweep out this low, something like that. I would love something like that, right? So I'm very discretionary, because then at the same time, if we just come sweep out this high, so swept out this high, we've turtle souped it, and then what could I potentially see? Oh, I'd like to see a shift in market structure towards the downside. 5-minute fair value gap tapped into it, and then I can short from there, because we potentially have this unfilled fair value gap down here on the 15-minute, which I've talked to you about earlier, saying how these are draws on liquidity for me. Unfilled fair value gaps are draws on liquidity. So I can trade very discretionary. Like I said, I can short from this high if it presents itself, but then at the same time, we can disrespect this, come down, sweep this low, and then continue to trade higher towards this high. So it's very discretionary, right? We either sweep this high and we short off from there. It's either we sweep this high, and if a short presents itself, a short presents itself, and then if not, we come down, sweep this low, and if a long presents itself, a long presents itself. In the meantime, if we just continue to run, and I don't really see anything above, if anything right now, I would prefer longs, because we've got all this LR above, we've got this external high for, which is probably going to be my weekly draw, my weekly draw for the next 2 weeks coming into the week, depending on how we finish today. But yeah, I'd rather prefer longs. But I wanted to give you basically just like how I'm seeing the market, right? How my daily bias can change, how I'm very discretionary, because a lot of people think, like when I'm doing one-to-ones, or like I'm just speaking to people and stuff like that, like a lot of people think, right, we're gonna take out this high here, and then we're gonna sell off. Which in this case we showed, but only this wasn't because of this high. It was because of this external high. But for an example, like this high here, right, a bit of an internal high. People will be thinking, right, we sweep out this hourly high, we're going to sell off from there, right? So a 5-minute market structure shift presents itself, 5-minute fair value gap, and they get stopped out because they fail to see that the overall bias is bullish, right? Why? Bullish market structure, we're disrespecting bearish PD arrays and respecting bullish PD arrays and continuing to move higher. Right, they failed to see that, and they failed to see all this other low resistance and external highs above them. Right, so taking trades off of just highs like this getting swept, and then your entry model presenting itself. If I took a trade every time my entry model presented itself, I would be taking multiple trades a day. But everything is based on conviction, right? But that conviction is discretionary. So what discretionary means is I will adapt and I will take something based on my own opinion and my confidence in that, right? It doesn't need to be like, oh, we've done this, this, and this, I'm only taking a trade. Well, I only take a trade if my entry model presents itself, but I'm only taking like here with this short, perfect example. I didn't take the trade. Why? Because there was external highs above, there was bigger draws on liquidity above, and if I'd have took this trade, I would have hit stopped out. I would have got stopped out. I would have hit stop loss within probably 5, 10, 15, within 20, 30 minutes. I'd have lost, and I'd have took a losing trade. So I shied out of that. Didn't take this trade. I actually wanted to see longs, but we didn't come and sweep out this low, which was sad. But yeah, that is pretty much how I go into the day, right? How I go and adapt my daily bias, how I trade discretionary, and yeah, that's pretty much it. If you've got any questions from anything I've said, please don't hesitate to drop me a message and reach out in the chat to ask me a question about, why do you do this, why do you do that, and I will answer them the best I can. Hope everyone has enjoyed the video. Hope you took some knowledge from it. Hope we're all having a good day. And yeah, feeling positive, feeling good about the week. Let's get into it and let's just smash it. So I shall see you all later. Bye bye.